Good afternoon, traders. My name is Thomas Ryan. This is Thomas T. Ryan and Company. We're going to do another quick video here and show you how we do in our current newsletter trades. We do publish a newsletter, comes into your inbox in email almost every day, 200 trading days a year. Here's our current stats. We're tracking the market on our daily trades, up 6%. Our weekly trades, these are daily time frames. It means we have trades that are generally opening and closing every day. Weekly trades where we come out generally on Mondays with new trades for the week, and we'll be in those for 2 or 3, maybe even 4 weeks. And there's the Dow average right now. So here's where we're at. I would love to have you join us if you like. 30-day free trial. Come on in, check us out. We take no credit cards on the free trial. Just your name and email address would be, plenty. That's all we need to see. Let's take a look at my TC2000 screen. So you know what this looks like if you've been here before. These are all my markets up here. This is the Dow. I keep gold. I keep the S&P, the Qs, the Nasdaq, the NYSE tick index, which is helpful on day trades that I do during the day. And we keep up monthly, weekly, daily, hourly, and 1 minute, sometimes the 10-minute time frame charts on here. And we generally trade, well, not generally, we always trade the weekly trades off of the weekly chart. We trade the daily trades off of the daily chart. Let's take a look at a couple of the weeklies. Here's one right here. This is Chubb CB. Got into this right down here. We've been in it for about 2 weeks. We're in our second week of it, and we entered right here over this high. And so, it took off nicely. Nice strong uptrend, oversold, low volume down in here. Well, low volume here and here. Looked like it was going to take off. It took a little while for it to trigger, and it triggered right here. So we're now in it and profitable. We closed 1R on that today. And so the stock is from our entry, which was, I believe, 146.22. We're now up 153. So what is that? 146.53. That's at 7. It's about what, 5-6% move from there to there. 5%, 4.73% in a week and a half. Pretty good. Let's take another look at another one, AJG. And you can ask why aren't we up 5% on the weeklies if that's what you did? Because we manage risk carefully. We do not put all our eggs in one basket. We generally like to talk about using 1% risk. That is the difference between your entry point and your stop loss. Represents no more than 1% of your equity positions, so that we don't have wild swings in our asset value in our trading account. I don't know about you. I don't like wild swings. I don't tolerate them well. Maybe you do. If you do, you're certainly welcome to use greater risk, but I don't, and so I like to manage them so that the returns on the trades don't jump up and down all over the place with big losses and big gains. Gallagher, same thing. The insurance stocks were oversold, so we jumped in right above that high right there. So we've been in that also now for a little bit longer, about 3 weeks, and we've closed 1R profit on that as well. As soon as we close 1R profit, we move our stop to break even, so we're guaranteed to be in a winning position in that trade, no matter what happens after that. Hopefully, the stock moves a little bit beyond that, and we make even more money. So let's see here. From about here to about here is 0.5%? That doesn't seem right. I'm probably not drawing it correctly. But we are profitable on that trade as well. Let's take a look at another weekly trade, IQV. This one was a no-brainer and did nicely as well. We got in right here, which was over this high, and it took a little while for this to take off as well. But it has taken off, and I believe we are 2R into this one as well. So this is now up to about there or so. That's showing 0.7% too. I'm not sure if I'm drawing these correctly to really get the the proper percent, because we don't look at the total percent move of the stock. We look at the difference between the stop and the entry, and we try and close our risk amount based on that. Hopefully we get to at least 2R, maybe even 3R. That's would be 2 to 3 times the amount we have at risk. So a 2x or 3x move over this difference right here. And of course, they don't all work out like that, but a lot of them do, and that's why we're at where we're at. Let's take a look at dailies. WLK, Westlake Chemical. This one we got in right here, so we're still in the position. We came in over this high right here, and again that high was about right there. So it's about 108.68 up to high there was 112, so 111. So it's about a 3% move, 2-3% move there. We've closed 1R on WLK as well. The stock is still moving. You see the volume beginning to drop off here a little bit. We'll see if it's got any more legs in it from here. But again, we've closed 1R. We're profitable in the position. We've moved the stop to break even, and it will not be a loser at this point. Let's go to the next one. This is a recent one. Methanex Corporation. So we just triggered that here, and we are not into 1R yet, but we're getting there. Hopefully, and that 1R is going to be right about up here somewhere. So we're in the position. We're profitable. We entered again over this high right here. So the entry on that was, what's the high there? The high was 59. So we probably came in at 59.22, 59.23, a few cents over the high. And we're now sitting at about 60. So we were looking for, I don't have all the numbers here in front of me, but we were looking for, I think, well, the difference between this and this, that's how we calculate the gain. So it's between the high of 59.20 and the low of 57.86. So that would have been our R, is that risk factor right there. And so again, we're profitable. When we generally also get within about 70 or 80% of our 1R target, we'll move the stop there. Even if we don't close 1R, we'll move the stop up to break even, because I find that stocks, especially if they've taken too long to make the move and they get to that close to 1R, but then they back off of it, good idea to move the stop then. Again, setting stops is not an automatic mechanical thing. It can be very more art than science, as I've said. And so, but what I found is generally you want to move the stop if you get that far into your move, because again, the move is based upon the past performance of the stock, and you can see it on my screen here. So one of the things I look at is the ATR7, the average true range of the stock. So typically we want the range to come down here. We're into a nice narrow. This one you see a nice little doji candle right there. That's a good signal that the stock is going to turn, and we're going to look for for a 1R to be hopefully less than a typical average. So the 50 period average of the ATR is like 142. We think we can get it to be about 70% of that number is usually what you're going to be able to get on any given one day. So that's what we're looking to try and do. We're trying to close 1R the day that the position opens. Doesn't always work that way, but that's some of the math that we try and use to make sure that we at least get to a 1R profitability, which is we'll close 70% of the position. So that's 70% of 1% of a 1% gain, and usually we hope to get that within a day or two. Let's take a look at ARE. Another recent one. We're still in the position. Alexandria Real Estate Equity, an office REIT. I was very reluctant to get involved in this, but it has worked out. We took only a half risk on this. So we did not get we took 70% of 1R, which was a half of 1R in this case. So we downsized the position simply because even though this has a strong chart, it looks exactly identical to all the other charts that we go looking for. Except for one thing, you do see this MACD. Generally, I'm looking for a nice matching MACD. This was not matching, but it was so classic, and this trend is so solid and so strong that it looked like we should be able to at least get 1R. But we did, but we downsized the risk to half of our normal risk position. So we got to 1R, but it was only on half risk. We'll look at the last one here. This is a good example. So we took it Allstate right here, and it's a classic. This is a classic situation. Nice strong uptrend, matching MACD, higher time frame has got a nice uptrend, and so we took it as this as this sell-off ended right down here, we came in over this high and we closed 3R all the way up to here, where we actually put in a manual stop. We usually would do a 3% trailing stop right in here, put a manual stop in, I believe it was right there. And interestingly enough, when you follow this system, you can very often get into, 1, 2, 3R up here, but by the time you get up here, you may very well see exactly this. Which is why it's important to always have a good, solid risk management system. We got out of the stock. I think it was yesterday. It was either today or yesterday. We were stopped out, and of course, this thing continued to drop. But we stopped out with a remainder profit. So 3R with a small remainder profit, and then the thing just collapsed. There are a lot of traders doing this. And you can see this is another classic pattern here. The MACD has not kept up with this. This was weakness waiting to happen. We were able to get our money out of it and then leave. But this is a classic pattern, declining MACD, kind of overbought. It gets up into an overbought. Here's all our stochastics, 5 period, 14 period, generally trade off the 14 period. It comes right up to this point here. Boom. It's done. So we took our money and left the room. That's our situation. Hopefully we have more of these every day. Hopefully this amazing market continues along. As you can see, the market today is not doing very much at all. The tech continues to move on a little bit, but it's a slow market today. The Dow is flat. Very, very, very cautious here, obviously, as I think a lot of people are, which is why you probably see things like this. A lot of people got their money on Allstate, traded Allstate, and got out. So thank you so much for being with us, and love to have you come check us out and give us your email address, ttryanco.com, www.ttryanco.com, free trial for 30 days. Thanks for stopping by.